please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of MIDCAP Radar. The market is trading at the day's lowest point. We're down about, 57, 58 odd points. 11,027 is where we are. And we're awaiting some really big numbers. Maruti, we are told, should be out pretty soon. And that should be interesting to watch. Stock is tentatively at about 9,395. With me is my colleague Sumaira. Good afternoon.
Hi Prashant, good afternoon to you as well. Let's quickly take stock also of how European markets have opened, because we've seen a considerable dollar weakness actually after Stephen Mnuchin said that a weak dollar would benefit US, and we've seen some bit of a rub-off globally, but not a whole lot. In the European markets also now opening just about on the flat terrain. But let's apprise you
the top stories, and we'll dive into some of them in a bit. But Ashwani Gujral is with us as always on the top of 130. Ashwani, thanks very much. 58 points lower on the Nifty. The crack is pretty evident now. Your reading of the market?
I've been telling you for the last couple of days, when it gets too good to be true, the markets start to give back. And my experience of expiry days, and some people are free to differ with me, is that if you start getting a trending move on an expiry, it generally goes to an extreme. And given the way people are long on financials and, overall market, I think we could have a fairly bad close. Bank Nifty could even close 100 points lower from here, because earlier only PSU banks were falling and privates were higher. Now, for the last half an hour, HDFC Bank has gone into the red, and ICICI Bank is fast giving up its gains, so is Axis Bank. So if all banks start to fall, then it will be difficult for the market or the Bank Nifty to survive. I think even now it's a great time to get short. The risk on the upside is very minimal, because we had apparent good news yesterday, and immediately within one tick we saw selling, and all PSU banks haven't looked back. I mean, bank like SBI is down 4.5%. So it's very clear that market wants to let off a lot of steam. And a lot of long positions should be there. Leverage guys should be out. That is a very clear indication that we are getting. As far as individual stocks are concerned, PNB is a sell with a stop of 188, target of 180. SBI is a sell with a stop of 320, target of 305. And Havells is a buy with a stop of 580, target of 605.
Okay, Ashwani, thanks very much. Appreciate you joining us with that, and good speaking to you. So, beware, I think is what Ashwani was telling us. A big cut, and by the looks of it, this is developing into a bit of a trending day. And on expiries, as we've seen before, it usually gets stretched to one extreme or the other, either up or down. This is down. I mean, we're down 64 now. When we started, we were down, 55, 56 points, and we're down 10 points more in a very short time span. So we got 0.6% cut on the Nifty. The Bank Nifty is down 0.75%, and the MIDCAP index is down about 0.75% as well. December, the advanced decline is now sharply in favor of declines, basically 2:1 in favor of declines as things stand. Yeah. We should just very quickly look at the European markets as well, stocks as well.
Actually, we did take a stock check. The opening over there is quite muted actually. So there's not a whole lot that's happening. The DAX has just opened. So that's about a 0.25% lower now. But the FTSE and the French market are seeing just about mild gains for now. But there's a CNBC TV18 exclusive news break that's coming through. We understand that the deadline to submit bids for SR Steel has been extended. Ritu Singh joins in with the details on that one. Ritu.
Sumaira, very interesting that the bid deadline has been extended the second time around, and this time to the 11th of February from the 29th of January. That was earlier set as the last day to submit bids for SR Steel. And this is because this asset is generating a lot of interest among buyers. And as we have been reporting, there are top-notch domestic as well as international players that have shown an interest in acquiring this asset. These include names like Tata Steel, Vedanta, ArcelorMittal, who are seen as, some of the top contenders, including Nippon Steel. And then, of course, there's, SAIL, there's SSG Capital, Aeon Capital that have also shown an interest. But in the meantime, the interesting development is that the promoters also are still weighing options and trying to see in what capacity they can bid back from SR Steel, because as of now, being defaulters for 1 year, they're ineligible to bid, but they are weighing in options to tie in with their Russian bank, VTB, to see if they could get financing to repay the past dues, a big pack for the company. So 11th of Feb is the day to watch out for. That is the last day. It'll be interesting to see if the promoters also put in a bid for this asset, but it is definitely going to be a very fierce competitive bid.
Ritu, thank you for that. Appreciate it. So keep an eye on that news flow, and Ritu will get us more as that story develops. I just want to highlight that the Nifty is now 69 points lower. So yeah, I mean 70, almost 11,015. I mean there's basically 15 odd points left on the 11,000. So it could go, could not, but we'll keep the space. Things are developing pretty fast. Just a couple of sectoral indices to keep you abreast of what's going on. So if you can have the PSU Bank Index up first, see what is happening there. Then let's take a look at that. That's the top loser. Look at the real estate index. That's number 2, about 1.3% lower there. The pharmaceutical index is down about 1.25% or so. And then you've got the IT index, which has done so well, which is down about 1% or so right now. I mean, actually across the board, except the Nifty Metal Index, which is up 0.6%. I mean, actually that's the only index which is higher. Everything else sectorally down and out. We'll take a very quick break here. With news that Nifty is down 68, we get you more specific insights into the market, more market coverage on the other side. Stay tuned.
IRB InvIT reported Q3 earnings. Tushar Kavedia, the CFO of IRB InvIT Fund, now joins in. Hi, Mr. Kavedia. Thanks very much for joining in. Since we don't have your comparable numbers with us, can you tell us what has been the value and the traffic growth in Q3 YOY? Mr. Kavedia, can you hear me? Okay, we'll try and touch base with the management of IRB InvIT in a bit, but I think, Prashant, the market has slipped a tad bit more. So now it's about a 220-point cut on the Sensex, and we've gone below that 36,000 mark. The market is pretty much at the low point of the day, and the MIDCAP index now seeing a cut of about 150 points as well. But there's lots of action that's been coming in from Davos. Amara Raja's Jaydev Gala says that global examples show us that government policy initiatives are needed for a strong growth in EV usage. In an exclusive conversation with Shireen, he also talks about the creation of jobs, which is being hampered by the increased use of technology.
If you look at the EV space today, it's a chicken and egg situation. All the automotive manufacturers, the OEs, are saying that they need a battery system, and they also need the infrastructure to come in for the charging stations and everything else. But then we, as a battery manufacturer, look at them and say, well, where's the demand? Yeah. You know, we can't invest $1 billion to set up a new lithium-ion battery plant unless we have a clear demand in place. Because it's a huge investment. It would kill most of our companies if we don't get a return quickly on that. So we're still going through that process. I think the government is very keen. They've announced a policy that by 2030 there will be no more IC engines.
No, they backtracked on that.
Oh, I say, okay, you're more informed than I am then. But, well, I think it's still, the trend is clear. Yes. Yes. The trend is clear. And I think that it's getting very close. And in my opinion, even
can the government play the role of creating demand? Because that's what they're hoping to do through EESL, and they've started the procurement process. Yes. So do you believe that that will be enough to stimulate demand?
Well, wherever we've seen a high growth in electric vehicles, it's been because of government policy initiatives, whether it's California or European countries. Recently I was in Lisbon, and I just came here from Lisbon, and all over town I've seen these electric e-rickshaws. Or what they call tuk-tuks. Right. And, that's because of policy. The city itself said that by a certain date, all of these vehicles have to be electric. So unless policy drives these type of changes, economics will not be able to drive it alone.
There's a lot of conversation around jobs, and while the government continues to maintain that jobs are being created using the EPFO data and so on and so forth, what's your own sense on the feeling on the ground when it comes to things like being able to create formal jobs?
Well, I can talk to you from our own personal experience in my group. we've been expanding capacities continuously over the years. And in the last several years, the job growth is not matching the investments that we're making because of automation and other technologies that are coming into place. The way that jobs were created earlier by expanding a certain amount in our factories or by building a new factory, we're not adding the same headcount that we used to in the past. So it's, investments are coming in, but the world is changing. And that's not only a phenomenon in India, it's all over the world. So you see people, economies are doing very well, companies are growing, expanding, but the job growth is not keeping pace with that. And that's something that even in this forum, we've been discussing the fourth industrial revolution. And what does that mean to labor markets? What does that mean to, working, the workforce? Will the working week shrink from 40 to 25 hours? What will people do with all that free time? I mean, these are the kind of issues that we've been talking about because of automation, artificial intelligence, machine learning, robotics, 3D printing, all these technologies that are coming in today, the job growth is not going to be the same as it was in the past. And this is definitely a challenge for us going forward.
Okay, numbers coming through from ACE. Looks good on the bottom line, actually. So 16.5 crores compared to about 5 odd crores, which they had done. The stock is steadily rising. I've not been able to actually open their P&L to get more details. But the big one that we're awaiting is Maruti, and that should be out any time now. A lot of numbers have been coming through. Amongst them is IRB InvIT as well. Tushar Kavadia, the CFO, joins in with more details. Hi, Mr. Kavadia. Can you hear me, sir?
Yeah.
Okay. We don't have your comparable numbers. So could you tell us what has been the value and the traffic growth YOY?
So YOY we have seen, so the numbers were not comparable because of the demon suspension of toll for the corresponding quarter. However, working out the same and actualizing the same, we have seen almost more than 12% of the revenue growth on the corresponding quarter basis.
Okay, I think what is the guidance now for the full year in terms of distribution, and what are the yields that investors can expect at current levels?
Yeah, so if you see presently the yield is close to 12%, and as per our guidance we have considered a 12% kind of yield for this particular year, and with the current set of numbers we will be able to maintain it easily.
All right, Mr. Kavadia, we'll leave it at that, sir. Thanks very much for joining in. All the very best. And let's head straight to Davos. Shireen has an important guest with her. Shireen, over to you.
Well, thanks very much. We continue our coverage here from the World Economic Forum in Davos. Joining us now is Johan Orica of Etikani. He's a long-time India watcher and has been with us on CNBC TV18 several times in the past. Johan, always a pleasure to have you. Good to see you back on CNBC TV18. Let me start by asking you in the context of what you know about India, because as I pointed out, you understand the India story. What did you make of the Prime Minister's address here in Davos?
Well, the Prime Minister opened the week on Tuesday, so there was really a prime spot. Last year, by the way, it was the Chinese president, and I think it was actually very much in line with what China gave the message. It was India is growing and is doing well. India is open to the world. India is ambitious and knows it needs to change, but we are changing. We are making progress, and he gave examples of that. But it's important that the world stays open for trade, and that we remain a global firm, a global world. And I think that was the key message. I expected that, to be frank.
Yes.
So he did not surprise me, but he delivered it really well, and I think the message is very, very important.
Talking about India and investments into India, specifically in the manufacturing side, and we've had this conversation in the past, the government's aspiration is to take the share of manufacturing to GDP to about 20% plus. You've just put out a report at Etikani talking about production readiness in the context of Industry 4.0, and you believe that there are only 25 countries out of 100 countries today that will be ready to embrace the changes that are upon us, and India is not one of them.
No, not. Because these things take time is the short answer. So Make India was announced
2014.
Exactly 5 years ago. no, less than that, 3-4 years ago. You cannot change an entire country, an entire ecosystem in a couple of years. These things take time.
All right, so that's the conversation from Davos, but we got numbers coming in, and this is UPL, where numbers, at least on the profit, seems to be a big beat. I mean, 579 crores as compared to 450 odd crores, which was the expectation. That is basically around a 30% beat on profits.
You know, there might be an exceptional, I wonder, because the revenue number is actually lower than what we were expecting. Our own poll was close to about 4,400 crores. So at 4,194, it's about 200 crores lower than what we were expecting. So we'll just see what all the numbers there are. But if you have anything else, Prashant, you want to read?
No, so let me just open the thing. But you're right. I mean, if the revenues are or maybe margins have expanded disproportionately, one doesn't know that. Just opening the release here. But I think we've been told that Naveen is here with us. I don't know if he's managed to see the release, which I've just managed to open. Naveen, over to you.
So I have the basic numbers, Prashant. In terms of the revenue growth, I think we have got 7% is what the revenue growth is. We were expecting a revenue growth of around 12%. Remember, two key main markets, that was Brazil as well as India. Both the expectation over there was around a growth of 12 to 13%. So maybe we don't get, the company generally doesn't give a geographical breakup. Generally, it comes post a market or something. So we'll have to look for that. But for the time being, I think that is the markets wherein we have seen a hit. And maybe that is one reason why the revenues have come at 7% growth. Also, the one key disappointment is the EBITDA margins. EBITDA margins have come in at around 17%, 17 odd percent versus an expectation of 19.5%. Also, this is quite disappointing given the fact that the utilizations were increasing for the company and there was a positive operational leverage that was expected to kick in. So both these parameters, that is the key operational parameters, the company has disappointed, and maybe that is one reason why we are seeing the stock taking a tumble in today's trade.
Naveen, but the profit number seems to be, the net number seems to be much higher.
So that is something which you have to look whether in the line items whether the finance cost is reduced or not. So I haven't got hold of the press release, so that is something which we'll have to check whether there is some exceptional or a reduction in the finance cost. But operationally, in terms of the EBITDA margins as well as revenues, a miss is what I would say.
Okay, I can't spot any real big change. I mean, there's under the head exceptional item, there is, I mean, it's not really substantial. I'm looking at the expenses number, finance costs, etc. Again, there isn't, I don't think there's anything so large so as to explain this number on the net profit that is coming up on your screen. But as Naveen pointed out, both on the top line and the margins, things aren't looking all that great for United Phosphorus, UPL, as against what was expected. So, but the net number, I think, would need a little bit more in terms of digging and going through the release. So, anything?
No, actually, I'm just trying to see if there is any more details available. But as of now, you're right. You know, nothing looks to stand out enough to explain this sort of divergence. But let's see. Maybe we'll just take a break for now. Try and get a hold of some more details for UPL, and we'll come back with more details. Your stocks will take this action forward.